Hello, welcome to lecture number 3 of module 1, when we have already discussed the prologue to financial statement analysis. Here we are going to deliberate on different users community who are going to make use of financial statements and the synthesis of financial statements by using different tools and techniques of financial analysis in order to arrive at informed and rational decisions pertaining to their varied objectives and vested interest. To start with, when you are going to talk about users of financial information, they are varied and they represent a different world of users having varied interests and objectives with which they are accessing the financial information. But at the same time, we all know that users of financial information are finding it difficult to read and extract valuable insights from the financial statements which are made available. So, in the light of financial statement analysis, it is imperative to debate and discuss with regard to the users of financial information and their varied interest, and it is essential to ensure whether those manifold interests and objectives with which different users are accessing the financial information are in a position to execute their decisions in a robust way by executing analysis of financial statements. To start with, when you are going to talk about users of financial information, as I said, they are varied. They are not only interested to go for an analysis of the past states of affairs of the company, rather they are equally inclined to make their journey into the future states of affairs of the company in terms of financial items and financial aspects. So, they are more or less going for both retrospective as well as prospective analysis of financial statements in order to arrive at cogent decisions related to different dimensions of finance pertaining to a business enterprise. Now, when we are talking about users, they are more or less falling under two different categories: the so-called internal users and the external users. When we say internal users, it simply represents those users or part of stakeholders community who are having any direct or indirect interest, but they are at the same time getting direct access to internal records which are getting generated inside every economic entity for their routine purpose and facilitating different day-to-day activities. But on the contrary, when you are going to talk about external users, they are the users who are only getting access to the financial statement which has been disseminated and disclosed by the body corporates for the use of information pertaining to their enterprises at the end of the stakeholders community. But so far as external users are concerned, they didn't have direct access to all those internal records which the internal users are getting access to. Now, there is contention with regard to the use of the internal records and the use of external records in the form of financial statement which have been disseminated by the company at the end of a designated span of time. And nowadays the span of time is quarterly. Statements have been released by each and every body corporate who is listed in the stock exchange for this said purpose. Now, the contention is that only the access to external information or access to both the information. Now, there are distorted opinions and some are of the view that internal records cannot be outrightly relied upon owing to the simple logic that they are subject to adjustments, they are subject to revision because they are exclusively restricted to internal uses. But on the other hand, when you are going to talk about external users who are getting access to the information which are disseminated through financial statements, all these financial statements are prepared by adhering to the accounting framework in the form of accounting standards, and it is always in a platform where robust comparison can be facilitated by getting the access and use of external information at the end of external users. Moving further, when we are going to talk about internal users, who are they? They are essentially the managers, the employees, the shareholders, the board of directors, the chief executive officers. Though they are all falling under the purview of internal users, but at the same time they have varied interests and objectives so far as getting access to and use of financial information which are disseminated. Now, managers, they are directly associated with the execution of different activities, but at the same time the managers are normally responsible and accountable for their respective functional domain. Say for example, a production manager is held responsible with regard to activities what is going on in the production facilities of a company. He is not so exposed and aware of what is happening in the marketing function, what is happening in the HR function, what is happening in the finance function. So it is imperative on the part of all the managers to get access to financial statements so that they can have a holistic and complete picture with regard to the financial states of affairs of a company. And if they are getting access to all these information in terms of financial states of affairs, they are in a better position, rather they are better off to execute different decisions either related to the day-to-day activities of the business or related to the short run as well as long run perspective of the business. Coming further, the employees. The employees are also equally interested to make use of the financial information to suffice their vested objective, because as an employee they are more or less interested in their salary hikes, their increments, what is the extent and magnitude of fringe benefits they are going to avail of from the company, and so on and so forth. So they are having a different and varied objective. Moving further, the shareholders are the owners. They are providers of capital. Obviously they are taking the risk and they are equally interested to know what is happening in terms of revenue generation, whether the company is generating sufficient earnings or not, whether the company is paying dividend equitably or not, what is the future prospect in terms of magnification in the financial value of the company, and so on and so forth. Moving further, the board of directors, they are more or less into supervisory roles. As we all know, they are more or less looking into all the states of affairs which are going on in the business in order to check out policies, frame strategies which are going to be implemented backed by short term as well as long term orientations. So they are carrying a different objective. Then moving to the last internal user, chief executive officers, they are leading the body corporate. Now, being the leader of the body corporate, they are also getting access to financial information in order to make aware of what is happening in the business and in order to take decisions cogently and timely in order to facilitate the growth and sustainability of the business. Moving further, when you are going to talk about the internal users and its vested objectives, let us say managers, the first internal users community, they are getting access to financial information backed by the very objective of taking different decisions, executing budgeting and forecasting activities, cost control and efficiency appraisal, then performance evaluation, cash flow management, strategic planning. So there is the mention of some of the essential uses of financial information at the end of the managers. It is rather not possible to jot down all the uses of financial information at the end of the managers. Moving further, the employees, they are more or less concerned about the financial well-being, about their job security, about the compensation packages and other benefits to which they are looking towards the company. So obviously, by getting access to the financial information, they are in a position to appraise with regard to their vested objectives and where does the company lie in terms of extending the said objectives at the end of the employees. Moving further, the owners or the shareholders, they are more or less backed by the very objective of evaluating the financial performance. What is the extent of profit retained and going to be reinvested in the business down the line? What is the extent of dividend payout out of the earnings generated in the business? Then what is the potential for reinvestment? Whether by considering different liquidity projects, the company is self-sufficient, the company is having sufficient accumulated profit which can be reinvested in order to go for such liquidity projects, or the company is going to go for additional borrowings from the external sources. So they are more or less concerned about these objectives when they are getting access to financial information. Moving further, the board of directors, as I said, they are into supervisory roles. They are more concerned about oversight of financial health and performance, ensuring legal and regulatory compliance, monitoring executive performance, strategic decision making and planning. So there are different directors representing different sections of the business ecosystem or the body corporates who are backed by varied objectives. So when we look at all these users who are internal to the business, though they are falling under the same umbrella that they are all internal users, but pragmatically they are completely different when we are paying heed or attention to their varied objectives with which they are getting access to financial information. Moving further, the external users. When you are going to talk about external users, as I said, they are restricted so far as getting access to the internal records generated at regular intervals in a company. They are only getting access to the financial statements which are disclosed and disseminated for use by the external users community. Now, there are many external users. To name few, I am going to start with creditors, then lenders, then government agencies, financial analysts, research organizations, data accumulators, potential investors, competitors and customers. They are all external to the business. Though they are external to the business, but they are having direct interest in the company. What is happening in the company with regard to financial states of affairs, whether the company is absolutely efficient enough in magnification of sales, whether the company is properly executing different activities in a cost effective manner, whether the company is producing a quality product and that too at a reasonable price, whether the company is having sufficient cash to meet the short term obligations, whether the company is having the financial strength to meet the long term obligations and so on and so forth, whether the company is paying tax properly based on proper estimation or calculation of profit, that is the interest of government agencies. So when you are going to look at the external users community, again though they are falling under the same ambit, they carry varied interest so far as the use and access to financial information is concerned. Moving further, when you are going to talk about external users with their varied objectives, let us start with the customers. They are more or less concerned about the financial stability. Why do they pay attention to financial stability? Obviously, those companies who are exhibiting financial stability, they are not going to manipulate, they are going to iterate on the qualitative attributes of the product towards which the customers are more concerned and attached to. Because being a customer, they are expecting the corporate world to deliver quality products with a reasonable price. Now, only those companies who are having a financial stability would be able to extend that so far as the customers are concerned. Moving further, when you are going to talk about customers, they are inherently price sensitive. Rarely we come across customers who are brand conscious, who do not pay heed or attention to the pricing tag. But in general, per se, when you are going to talk about the customers community, each and every customer is price sensitive. So they are always inclined to know about the pricing and the way the pricing is done in a company so far as their product is concerned. Moving further, they are also interested to know company's trustworthiness, whether a company can be relied upon, because there are different ways and means of calculation of price and different ways and means of charging different cost while we are determining the price of a product. So can it be relied upon? That is a big question which hovers around the minds of the customers community, because always they are carrying an implicit ideology that companies are overcharging by selling their product in the market. So they are concerned about that. Moving further, whether the companies are having business partnerships, because to a certain extent companies, the customers, when they are going for a product, they would like to see that the product what they are consuming is having an international tag. So obviously it is a matter of delight at the end of the customers community when they are going for a product which is having international tag. So these international tags means if a company of Indian origin is having tie-off with one international company, obviously that particular pleasure at the end of the customer can be fulfilled if the business is having partnership with foreign entities. Moving further, the next external user is creditors / lenders, as they are the suppliers of capital, either for a short run orientation or for a long run orientation. They are more or less concerned about the financial credibility of the business, and they are accessing the financial information in order to dig out whether the credit facilities can be extended or not in the form of granting of loans. Similarly, when they are into the protocol of finalizing the loan proposal, they are not only interested to know what the company did in the past, rather they are going to make a journey into the unknown world of future of that particular company, because when they are extending credit today and say for example a particular company has applied for a loan of 500 crores to a bank and the bank is appraising and on the verge of taking a decision whether to sanction that loan or not, the bank is having no choice but to get into the future of that particular business. So financial information facilitates that. Obviously that is a very difficult task, because nobody knows all the conditions which are going to prevail in a future span of time so far as company is concerned, but at the same time they are bound to go for all these things, though it is in a state of probabilistic orientation. Moving further, they are also equally inclined to know the quantum or the extent of default and the risk associated with it. Obviously those who are the providers of capital, they are rather more concerned about their security and safety of capital which they have extended. So if there is heavy prevalence of default risk, obviously the creditors or lenders are going to stretch outward so far as extension of loans and credit facilities are concerned. They are not going to extend credit facilities to those companies who are having high risk of default. So with the use of financial information and application of different techniques of financial statement analysis, they can be able to dig out the extent and magnitude of risk of default to which the companies are generally exposed. Then the credit worthiness. What is the level of financial affluence? Whether the company is financially well off to take off all the challenges which are emanating from different activities in the context of finance. So it is rather a fundamental objective of all the lenders or the suppliers or the providers of capital to a company to know about all these things by using the financial information at their disposal. Moving further, the financial analysts. When you are going to talk about financial analysts, they are external, but they are extending different financial services to other users of financial information or other stakeholders who are having any direct or indirect bearing with the business. To start with, the financial analysts are using financial information to evaluate the performance, to analyze the financial matrices, and by doing this and using the causal relationship between different items of finance, they are in a position to foresee the future states of affairs of a company with the help of different techniques of forecasting, by preparing pro forma profit and loss account, by preparing pro forma balance sheet, by preparing pro forma cash flow statement, using financial information as the base to make a journey into the future of the corporate world. Moving further, when you are going to talk about research organizations, they are more or less concerned about the evaluation of performance, the prediction of future trends, and different researches which are conducted as part and parcel of their farsightedness, because it is the research and the process of iteration using the financial information which can lead different innovative ways and facilitate the companies to think out of the box when they are into the task of devising different policies or making different strategies to stay competitive and sustainable in the competitive world of business what we are witnessing at present. Similarly, the government agencies. The government agencies are looking at the company as a source of generation of revenue, because the governments are resorted to the task of imposition of tax in different forms so that they would be able to generate sufficient revenue from the corporate world to suffice their financial objectives. To start with, the governments are vested with the very objective of economic planning. They are vested with the further objective of regulatory compliance, taxation policies, fraud detections, because governments are not only looking at body corporates as a source of revenue, the governments are there to play the role of watchdogs. They are there to safeguard the interest of all the stakeholders community because they are the sovereign. So, if a company is doing some fraudulent practices, that has to be detected by using financial information. Whether the companies are preparing their books of account and disseminating the financial information in compliance with the accounting framework, the regulatory standards which have been prescribed by different agencies, may it be national or transnational. Now, moving further, when you are going to talk about potential investors as external users, they are rather more concerned about assessing the financial health of a company, because being potential investors, they have nothing to do with the past or the present, because when they are going to take the decision to commit their capital today, they are more interested to see what is going to happen to the future of their business, because they are expecting to reap the benefit of their capital commitment in the future. So, they are rather more concerned to dig out the future states of affairs, and the use of financial information facilitate them to do so and accomplish their vested objectives. Moving further, they are also equally interested to know about the company in terms of financial states of affairs, because they are frequently into the protocol of deriving and appraising the value of shares or the value of stock in which they are intending to invest. They are backed by this orientation owing to the simple reason that they are into the protocol of devising a portfolio in which they are going to execute their investments and accomplish their expected return from the corporate world. So, when they are into the orientation of picking and choosing different companies, obviously they are into the orientation of analyzing the financial states of affairs in terms of future. Like here I have made a mention of the fact forecasting future performance, because as potential investors they are rather more concerned about the future performance of the company. Then there comes the data accumulators. They are a typical class of external users because, like say for example, the Bloomberg, the routers in our country, the CMI database, the ProBase, the Capital Line, they are essentially accumulating financial information over a span of time and keeping it in a systematic and scientific manner so that different users community can get access to those information as and when they are into the protocol of arriving different financial decisions in an informed manner. Because if the data will not be made available, then it is very difficult on the part of the stakeholders community, whether they are internal or external, to arrive at robust and rational decisions pertaining to different financial aspects of a company. So it is one of the fundamental requirement at the end of the users community to get access to the data on a prolonged basis, and that is the purpose which is served by the data accumulators. And here, as I have made a mention of the fact, creating data repository, then disseminating financial information, supporting internal data storage system, facilitating cross section and time series analysis. So without the availability of data over a span of time pertaining to different body corporates, it is rather not feasible and possible at the end of the users community to either go for a cross section or go for a time series analysis in order to arrive at informed decisions in a holistic manner. So it is imperative on the part of these users so far as the financial information getting disseminated through different financial statement is concerned, which is reflecting what is happening in the corporate world in terms of finance. Then coming to the suppliers, they are also equally interested to know, because those who are suppliers of different raw materials or those who are suppliers of different resources, they are also equally inclined to know what is the financial affluence, at what level we can rely upon the company so far as the payment which is going to be due in the near future, so far as their activities are concerned. So it is imperative on the part of the suppliers to make use of financial information before they are taking the decision to which company they are there to execute their supply or to which company they are going to say no. So if the suppliers are there to take that decision rationally and scientifically, they have no choice but to make use of financial information and arrive at that particular decision whether to extend supply or not. So they are also making use of financial information for the purpose of cost planning and budgeting, because of stiff competition in each and every domain of business. There prevails thousands of competitors. Now they are there to compete with their peers in order to grab a business opportunity. So unless and otherwise they will get access to financial information and make use of that in a proper and legitimate manner, they cannot grab those opportunities so far as the level of competition is concerned. Moving to the last users, that is the competitors, we all know that there prevails oligopolistic market where the business entities are conducting and convening their activities. So in oligopolistic orientation, if one player is executing a policy or taking a strategy, the rest of the competitors are not going to remain silent. So they are there to retaliate, they are there to pose some reactions to that of the actions taken by one player in the said industry or as a whole in the corporate world. So use of financial information by competitors are a must if they are there to survive and sustain in this competitive world of business. I hope I have touched upon all the users, both external and internal, who are making use of financial information getting disseminated through financial statements in order to serve their varied interest and objective and facilitate all the users community to arrive at financial decisions in an informed and rational manner. Thank you. Thanks a lot for your patience.